What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all are having a fantastic day. I hope you all had a fantastic weekend. Of course, a little shaky in the market today. First thing I want to say, this is on behalf of our producer, Al. He's the one who makes all of this happen with the audio and the visual. I guess a singer, Roberta Flack, had just passed away today. I believe at 88 or 83. Regardless, if you get in the den, this is one of the really cool things that Al does in the den, is before programming, so before Tommy's show at 9 a.m. Eastern time, he will play, we have a bunch of music playing, and it's very good. Al has a great taste in music, very calming, maybe a little bit energetic depending on the day. So now's a better time than ever to go to TFNN.com, go to the services tab right here, and you can check out the Tiger's Den trading room. That is for $1 a year. The only reason we do that is just so we can keep everybody safe. We know who's in there, and yeah, it's a really good deal. But yeah, get in there before 9 a.m. Eastern time and listen to what Al has planned for you. Let's take a look right now. You know, okay, we're recovering a little bit, at least in the general indices. Let's get on a, and I will be the first to say that I mean, in the futures were green. I was right for a moment and then became not on the open. I thought the sell-off on Friday, nothing had really materially changed in a major way. You had futures going a little bit green last night. And of course, we sold off pretty heavily today. We traded to a low of 596.49. We've recovered a little bit since then, almost reaching about 602, but we're trading right now below that 600 level. Trading at 599.60, that's in the SPY. Yeah, the composite off about 0.61% at 19,404.89 cents. You get the Dow Jones Industrial trading about 0.4% at 43,602, with those Russell futures off about 0.16% at 2,195. You know, I think really, you know, what's going on here is, one, you have massive earnings this week. Okay, so we're taking a look. Really, the big one that we're all looking forward to, more or less, is NVIDIA. That's going to be on Wednesday. That's after the close. But I mean, you also have Kava, which I think will be quite interesting. I think Kava has a good argument for you know, a very solid quarter, right? And again, I'm using the same kind of logic that we were using with Coca-Cola, which ended up being proven correctly, which is using analytics right online for searches of these companies, whether that's on Google, instances of people posting about it on like Twitter or Facebook, and then people that you hear kind of in your daily life. I mean, Kava, again, is very attractive to the same kind of group of people that we were looking at with Diet Coke, right? So I'm going to take a little bit of a closer look into Kava, but at least from what I've witnessed in my daily life, I know a lot of people who are consistently going to Kava. Of course, it's a relatively newer kind of brand, but you know, we'll follow through with that. We'll definitely speak about that tomorrow. Of course, you have Hims coming up today as well. This is super interesting stuff. I did not take a position in Hims at all yet. I believe you're bouncing back up today. Okay, we went to a low of 43.81, but of course you had a massive sell-off on Friday. What's going on, in my opinion, with this is your companies that have seen really rapid growth recently, everything's kind of pulling back a little bit, right? Your companies that have seen very rapid growth and are much more dependent on future rapid growth are going to be hit far harder, right? I mean, so you're looking at things with Hims like that, Nebius, things that essentially are just a little bit expensive. You know, I think there is, I mean, you're looking at Hims, the P of 111, right? This is fine when everything's going swimmingly and there's no fear of illiquidity. We've even seen this be fine in environments where capital cost is elevated, right? What I kind of believe going on here is Trump is kind of injecting a little bit further uncertainty into the market beyond just the tariffs, right? Which we already saw was causing a lot of fear of illiquidity. But, you know, we'll talk a little bit with the bonds, right? And I'm talking technically munis regarding the railway in California. That's going to be Los Angeles to San Francisco. He's thinking of clawing, FDOT in particular, is thinking of clawing back a lot of those funding. But there are municipal bonds that are tied to that, and that can freak people out substantially. in my opinion, I think that makes people kind of scared. And they say, hey, you know what? I'm not sure what's even going on with something as, relatively secure, right? I say, as something like munis, right? Now, of course, this is federal funding. They can't obviously rescind the municipal bonds, but when a lot of that project also is being funded by federal grants, you get a little bit of a problem there. So I think that is adding a fear of illiquidity into the market for sure. Additionally, another thing that I think is making people kind of sell off a little bit, especially in your really high growth stocks. I mean, of course, you see Palantir coming off. They're just more sensitive, right? Because they've been more sensitive to the upside, and that is kind of to be expected, right? You're still trading at 477 PE, which I think is very expensive for this stock. I would venture to say I think this might go even lower. It's the same kind of theory I have with Tesla. I just don't think it has that energy yet to really grow exponentially. So we'll talk a little bit more about Palantir at some point this week, kind of how some of the revenues they had weren't really done or weren't really achieved via operations, which I think is a little bit sketchy. Of course, I think you had a really large kind of hype on it surrounding earnings. And of course, they're very dominant, right? I mean, they're going to stay around even with the decrease in funding for the military, as Trump is kind of suggesting. I don't think that really should have resulted in the sell-off for Palantir. I think what that says is that there is a ton of money in being used to fund the military. It's not being used very efficiently. It doesn't mean you get all this stuff cut. I mean, Palantir and its Maven system is so necessary. We are still going to build out these drone systems that are going to use Palantir AI. I'm looking at Red Cat in particular. So I think that has staying power. But I mean, this thing has run up strongly over the past few months, and it's still very expensive. I think you were just starting to get kind of analyst acceptance on it. As of recently, of course, you had a lot of Congress people buy this stock as well. Not that that necessarily matters, but it just kind of shows you that the taste for it is kind of expanding a little bit. Well, hold that thought. We're gonna have Steve Rhodes on next segment, and then we're gonna go back a little bit to where we're talking about that could be causing some fear in the market after we have Steve on. Folks, stay right there. We'll be right back.